Hey guys, welcome to this course. Today we will discuss why market cap matters and how to build a crypto portfolio. If you're new to crypto, this video is extremely important to you. And if you've already invested a little bit or some decent amount, this video might completely change how you look at the market and help you understand what your portfolio consists of. Because I'll tell you, most beginners focus purely on price. They think that this coin is cheap, so it can go up a lot. But price alone means nothing without understanding market capitalization. Market cap helps you understand three critical things: how big a project really is, how risky it is, and how much it can realistically grow, or in other words, how realistically it can go up. So we'll start with what the market cap is. Market cap is simply the price of a coin multiplied by its circulating supply. And let me give you a very simple example here. We'll go on CoinMarketCap and we'll have a look at Bitcoin. Bitcoin costs right now, as we speak, an $88,000 per one token, per one coin, which sounds very expensive. But Bitcoin only has 19 million coins in circulation. So when you multiply price by supply, Bitcoin's market cap is roughly, as you can see over here, 1.75 trillion. That's the market cap of Bitcoin. Now we'll compare that to a smaller project, let's say like Polygon or Matic. If we look at Polygon, the price of Polygon is only 11 cents, less than $1 per coin, which sounds very cheap. But Matic has billions of coins in circulation, so its market cap right now at this current price is 1.16 billion. So you can simply see the difference. It sounds cheap, but it has pretty big market cap already. And it has a lot of coins in circulation. So this is why market cap matters more than price. Bitcoin is much larger, more established, and generally more stable. Everyone knows Bitcoin. Matic is much smaller, more volatile, and has more room to grow compared to Bitcoin, but also has more risks, and we'll talk about it shortly. So in this course, I will show you exactly what market cap really means, why it matters for beginners, and how to use it to build a smart portfolio. So hopefully by the end of this video, you will know very well how to allocate your money properly instead of just gambling blindly. So let's go now deeper into the market cap and break it down into simple tiers. Think of market cap like a company size in the stock market. Big companies like Apple or Google, if you're in stocks, this will be a good example for you. These two are stable. Small startups, they can grow very fast or fail completely. And crypto works exactly the same way with the different projects. So if we talk about large market cap projects over $10 billion, we would go on CoinMarketCap. We can roughly say that those above $10 billion market cap would be the first 10 projects on CoinMarketCap. These are the biggest, most established projects. Bitcoin, Ethereum, Binance Coin, BNB, you have XRP there, you have some stable coins. These coins usually they move slower, they are less volatile, and they're much harder to manipulate. But you have to know that these projects, they will not do 50x overnight. They will not give you even like 10x overnight, but they're also less likely to go to zero like some other projects. For beginners, large market cap projects are the foundation of a portfolio, and not only for beginners, even for experienced investors. Then you have mid market cap projects, let's say from $1 billion to $10 billion. And if you look at CoinMarketCap, those would be your projects from top 50 to top 10. You've got projects like Aptos, Sui, Sei, Aster, Polkadot, Kronos, all of these, Litecoin, Zcash, Hyperliquid, Dogecoin. These are your considered as mid-cap coins. And you've got projects like we just discussed, Sui, Sei. These projects are already successful, but they are still growing, they're still developing, and they usually offer a balance between risk and reward. There is more upside than Bitcoin, but of course more risk than Bitcoin. And this is where many strong bull market performers come from these mid-market cap projects. We had Solana in the previous bull run, from mid-market cap becoming to a large market cap project. Then going down, you have small market cap projects. These are from top 50 to top 100 on CoinMarketCap, from $500 million to $1 billion market cap. These are projects like Starknet, Tia, Morpho, Aerodrome Finance. Even on the second page, I would say quite a few of them still fall into this category. Maybe the second page, and from top 50 below on the first page. These are your small market cap projects. These coins, they can move fast and they can do from 5 to 10x in a bull market. But these can also drop 50 to 80% in bear markets or on corrections. This is where research here becomes critical. You can invest blindly in the large market cap projects like Ethereum, Solana, XRP because those are known, well established. But when it comes to small market cap projects, this is where you need to do your research. And I already have a course on how to research projects with free framework and guidance and checklists that you can follow easily. It will be in the description below. You can download it and use it for free. Then you have two more categories of project. Microcap coins from 50 million to 500 million. These are very early stage projects and they're extremely volatile, liquid, high risk, high reward plays. So you should never put a large position of your portfolio here, especially as a beginner. And the same applies to meme coins, which could be sometimes below $50 million market cap. These are driven mostly by hype, social media narratives. They can pump hard. You can see them going crazy up in a day, but they can also crash to zero very, very quickly. So just think of meme coins like lottery tickets, not investment. So these are the different tiers that you have, and you as a beginner should focus on the first group, large cap and mid cap projects. And we'll talk about portfolio building shortly. But why market cap matters, what we see from what we just discussed, this tells us how risky a coin is, how much money needs to flow into this project for price to move, how easy it is to buy and sell. So that's why market cap is very, very important. So now I want to talk you through the basics of building a portfolio, because once you're into crypto, this is the next very important step, understanding how to build your portfolio efficiently. And if you want some help with portfolio, you can book an appointment, but here I'll give you some basic tips. So your portfolio tells you simply how you divide your money across different assets. The biggest mistakes that I see in beginners and from my experience so far is that beginners are putting all their money in one coin, in one narrative, or on hype trade. Instead, we want to have diversification. And here is one example. If I had $1,000 right now to invest today, what I would personally do is I would put 10% in Bitcoin, which is $100. Then I would put 30% in large market cap projects like either XRP or Ethereum or BNB, even Solana. In one of those, that's $200. I would choose one project like that. Then we'll have mid cap. I would choose a project like Sui, Sei, Caspa, something from CoinMarketCap in the top 50, and I'll put 30% in that, which is $300. Then I would choose a small market cap project that I would put 20% into, and this could be a project like D-Book Protocol, Aerodrome Finance, any of the projects in top 100. From 50 to 100, I would choose one project to put $200 into. And then I would have maybe 5 to 10% in stable coins to be ready to buy if prices go down. And then I would have 10 to 15% for microcaps and meme coins. That would be $100 to $150. Depends on how much risk I can tolerate and how much I'm willing to actually risk. Because here you should remember that you should only invest what you are willing to lose. That's the first golden rule. So why this portfolio, this allocation would work? It would work because Bitcoin anchors your portfolio. Large caps give you steady growth. Mid and small market cap projects give you upside. And micro caps and meme coins, they give you optional high risk exposure. And stable coins protect you during volatility. So this structure will help you survive bear markets and benefit from bull markets the most. So what you will notice with this example is that most of your money is in safer assets, but you still give yourself exposure to high growth. And this is how professionals and experienced investors think. They don't go all in on risky coins. They control risk. And what I've seen so far as common mistakes when it comes to portfolio and from my consultations with clients, the most common mistake is that people go all in into microcaps and meme coins. They're chasing coins after big pumps. They buy when it's too late and they ignore liquidity. If you can't sell easily, you don't really own the profit. You need projects that you can sell for some profits. And one other common mistake that I forgot to mention is over diversification. I had clients coming to me with a portfolio of above 300 projects, and that's way too much. It will become uncontrollable and unmanageable. You need a concise, solid portfolio with very few picks that at the same time you're not putting all your eggs in one basket, but also you're not over diversifying. If you just invest $50 here, $50 there, $50 in another project, it's not going to work. You need to streamline your portfolio. And let's say if we had $5,000, what we would do right now. With $5,000, the way I would build my portfolio is I would focus, let's say, on 5, 6, 7 projects. I would put 15% of my money into Bitcoin. That's $750. That's my core hedge. It's a dominance play and it gives me insurance. Then I would put 20% maybe into Ethereum, which is again, very stable project, the backbone of crypto. Another 20% I would focus either on, let's say, XRP or Solana. I would prefer Solana, so I would put $1,000 into Solana because that's the fastest growing ecosystem, strong retail and meme coin flow, and it has very high upside potential compared to Ethereum. I would bet higher on Solana. Then I would choose two projects that are, let's say, large market cap to mid cap, maybe Chainlink, because it has a solid infrastructure. By the way, this portfolio is just an example. I don't hold most of the projects that I would talk about now, or I would give as an example. Then I would put 15%, let's say, in Chainlink, which is $750. Then we would have maybe another 10% in, or 12% in another play, maybe Injective, for example, which is high performance project, strong tokenomics. That's another project that, for example, I can bet on. Then I would look into something with smaller market cap to put 10% into, and I probably would choose Aerodrome Finance because, let's say, I've done my research, it's linked to the base ecosystem, it's a DEX, it's linked to Coinbase narrative exposure, and so on. So I would bet on Aerodrome and I would put 10% into that, which is another $500. So from all my portfolio and my money, I've allocated almost all of it and I'm left with 8%, which I would allocate to something high risk play, high risk, high reward, and that's $400. I would choose a meme coin or something else just which is for speculative gains. And you can see how my portfolio looks like right now, with Bitcoin, Ethereum and Solana leading, and then we have mid-market cap projects for more exposure to the upside, and then we have some optional investments. And why this approach would work? It would work because we have three major blue chips, Ethereum, Bitcoin and Solana. We have two established infrastructure winners like Link and Injective. One solid ecosystem bet, and that's Aerodrome Finance. And we have one project that is for speculative gains. So we are not betting here on meme coin noise. We are not overexposing ourselves to microcaps. And every project that we are choosing has some job, has some role to play in our portfolio. We are not choosing it for no reason. Next steps would be for you to decide when to take profits, how to rebalance, for example, every 3 months after big market moves and so on. And tracking your portfolio with tools like CoinGecko or CoinMarketCap is essential to keep your emotions under control. And just to finish off, what I can tell you if you're especially a beginner as tips is start small, be patient, stick to your plan, avoid hype, learn continuously. What you should not do is don't overexpose yourself to meme coins or small market cap projects. Don't just go into the space with no plan, and don't make any emotional decisions. And market cap will tell you how risky something is, and your portfolio allocations tells you how to survive and how to grow. When you combine these both, you'll find yourself that you stop gambling and you start investing. And if you found this helpful, you can download my free beginner's portfolio template below or join my Discord where I share real examples, what I buy. You can also see my portfolio and you can have access to my buy and sell alerts in real time. So that's for me today. Thank you so much for watching. I'll see you in the next video.